Okay. Now, the teaching will be based on even last week's price action self, based on the trades that we took last week. So, first of all, last week I taught you guys about market structure, the different ways we find our structure, the inducement, and one of the POIs that I make use of when it comes to trading this particular strategy. Now, like I said, I don't just make use of one point of interest. I make use of 2 points of interest. The first one being the order block, which is the zone in the market where there are a lot of institutional orders. And the second one being a breaker block. And they basically said a breaker block is a failed order block or a failed zone. What I mean by that is normally you understand the concept of support and resistance. That's why I say this class is not for beginners. The concept of support and resistance, that wherever there's a resistance in the market and price eventually breaks that resistance, the resistance that price broke will now be used as a support for price to retest to that support zone and use it to take a buy if it was a bullish breakout. And then another concept of if price breaks a support level, then the support level becomes a new resistance for price towards come up and use this word and take a sell instead. So that is the same concept of what a breaker block is. A breaker block is a failed order block or a failed zone. Most of the times we can have an OB that price fails to buy or sell from. For example, every single zone where there is a break of structure or wherever there's a market structure shift, just know that there was as an order block there that was supposed to prevent that market from breaking that particular zone. The moment price took and broke this zone, price broke this high. If you notice, you can see that there was an order block here that was meant to prevent that break from happening, which is this order block right here. The moment price also took out this high, there's also another order block here that was meant to prevent that break from happening. And the moment it took out this high also, there was also another order block here that was meant to also prevent that zone from breaking. Now, when market now fails to hold from those zones and breaks past those zones, that is what you now call a breaker block. So a breaker block is a failed order block or a failed zone. Most times it has the shape of an order block. It's very, very easy to detect. Sometimes it can just have the shape of a full body candle there, but as long as it's a zone that price breaks, is a breaker block. So for an example, if you have price making higher highs and higher lows, when price breaks this high, the body of this high automatically becomes a breaker. Then the zone down here will now be the other block that triggered that break to happen. So now you now have probably 2 points of interest where price can come down to for another retest for it to continue pushing to the upside, either this breaker block here or the other block down here. Now, there are rules in picking a point of interest that will now let us know whether we are going to pick our entry from where this breaker block or whether we are going to pick our entry from the other block that triggered that break to happen. So once you have all those rules made, you can either pick your entry from this or pick your entry from this. So, but however, two of them are valid points of interest to be used as entries. So for example, now let's say we have an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, then there happens to be a market structure shift occurrence. The moment price does a structure shift and the candle that caused that market structure shift to occur closes. Once the candle closes, you have to look upwards to find possible points of interest. So if you look upwards, you can see the zones that price broke during the process of creating the market structure shift. And if you look and see what this breaker block here, this zone that price just broke, the body of this zone is what your first breaker block is. Look up again, you can also see what another breaker block here, the body of the breaker block here. Then up here will now be the other block that triggered that market structure shift to happen. So you have 3 possible points of interest that price can use. This is for the scenario of a market structure shift. Now, for the scenario of a double breakout structure, because we don't just use single breakout structures, we use double breakout structures. So let's assume we have a high here, then price starts making what higher highs, then higher lows, higher highs, then higher lows, higher highs, then higher lows, higher highs, then higher lows. Let's say that there's a high here. There's also, let's say, another high here also. Then price now does this double breakout structure to the upside. Once the candle that caused that double breakout structure to happen, once the candle closes, you have to look downwards to find possible points of interest. So if you look, this particular zone that price took out while it was creating this double breakout structure is one POI. This is a breaker block. This one also down here is what? Also another POI, another breaker block. Then this one here is also another POI, another breaker block. Then the last one here will now be the other block that triggered that break of structure to happen, that double break of structure to happen. So in a market, you can have multiple points of interest occurring in one particular zone, but knowing the one to pick and knowing the one to avoid is the one that now fits all the criteria of picking a proper point of interest. For example, in this scenario, price was on an uptrend initially. Initially on an uptrend, it was giving us what? A clean higher highs and then higher lows. A clean higher highs and then higher lows. Then price came here, higher highs, then higher lows. Then eventually a price did what? Came up here, took out these highs, this high here, like this immediate high in the market, also took out this resistance level here, meaning that it took out more than one zone. The moment that occurred, we got what? A double break of structure. Now, when we got that double break of structure and the candle that caused that double break of structure to occur closes, which is what? Exactly this candle. The moment this candle closed here, what you have to do now is look downwards and find possible points of interest. So if you pay attention and look downwards, the zones that price took out was where? Was this high, this high, this high, plus this high also. So there are actually three possible zones where you can pick as your entry. But if you pay attention and look, you can observe what the body of this high is this breaker block here. This is one POI. The next POI is what? This breaker here. Then the next POI is what? This other breaker here also. Then finally, this other block. So you can have multiple points of interest when market gives you a double break of structure or a market structure shift. Another example for this scenario is when price what took out this high, took out this high also, and took out this high also. We got what you call a double break of structure. After that, you have to look downwards to find the possible POIs that exist in this particular setup. And if you pay attention, you can see the body of this high, which is what this breaker block here. And secondly, you also have what the body of this high here. And thirdly, you also have the body of this high here, and then the other block down here. So you have actual like 1 to like 4 POIs here waiting for you. Now, the one you now pick, whether you're picking from your other block or whether you're picking from the first breaker, from the second breaker, the third breaker, the fourth breaker, all depends on the one that follows all the rules of picking a proper point of interest. Are you guys following me? So whenever you get your market structure shift, all you need to do is what? To first pay attention to the zones that price took out. Those zones that price took out will tell you the possible points of interest that exist at that level. Another example, we had and because now market structure shift is for reversal. So before price was initially bearish. So before it, let me tell you guys something. If you're looking to reverse the market after it has been on a particular down, let's say price has been on a downtrend for a long time. If you're looking to get a reversal entry, you use market structure shift. Continuation entries is what you use after market has now started reversing and you're looking for ways to still join in what the continuation of that new trend. What I mean is that if you had an initial downtrend for a long period of time, if you're expecting price to now buy to the upside, you have to first wait until you get a market structure shift to the upside. But after you've gotten that market structure shift to the upside, what you're now going to be looking out for is now double break of structures for you to now continue taking trades back to the upside. You're no longer looking for market structure shifts, you're looking for double break of structures to maintain price being on bullish. But if it was initially on a downtrend and you're waiting to take a buy, or you're not expecting a double break of structure, what you're looking for the first buy to occur is for you to get a market structure shift. So something like this, now we're on a previous downtrend on BTC USD. Before the reversal now happened, we got price before the trend ended. We got price doing this. You can see lower highs, you can see lower lows, lower highs, you can see lower lows, lower highs, you can see lower lows, lower highs, you can see lower lows. Then what the price do came up here and gave us a market structure shift by taking out this high. Now, if market is on a downtrend and the market structure shift occurs, what does it mean? Which direction are we now looking to take a trade in? If you have market on a downtrend, then you get a market, exactly. So the moment we had price on a previous downtrend, then all of a sudden we got a market structure shift to the upside. It means that what we're expecting price to do is what to give us bullish moves. So because we're expecting price to give us bullish moves, we now count the market structure shift as the first part of our strategy. Now, once that happens, once that market structure occurrence happens, you now have to look at the zones that price took out during the process of creating that what market structure shift. So if you actually pay attention to the zones that price took out, you notice that it's only one zone, which is what? Here, this high. It did not take out these ones when it was creating that structure shift. If it took out these ones, then the zones that price took out will include maybe this one here. But the only zone that price took out was this particular high. And the body for that high is just this particular breaker block here. Because this is another block that price failed to sell from. So this is what the body of that zone that price took out is here. So this is the breaker, 1 POI. Then if you look down again, you'll find another point of interest, which is what the other block that triggered the move to happen, which is what the bearish candle, then the bullish candle that engulfs it, which is what this is the second POI. So you have two solid point of interest here that price can actually reverse from. Now, when you have more than one POI existing in one setup, how do you determine to want to use? Now, that is where the rules in picking a point of interest comes in play. There are 4 rules that I pay attention to when it comes to picking a proper point of interest, and they are as follow. So first off, the first rule of picking a point of interest says that before you can start looking at any POI, anything at all on the chart, ensure that you got a market structure shift or a double breakout structure. That is the first rule of picking a proper point of interest. Ensure that there is what? A market structure shift or a double breakout structure. So let me type it down. There needs to be a market structure shift or a double breakout structure. Mind you, I said double breakout structure, not a single one. So this is the first rule in picking a point of interest. Ensure that there is a market structure shift or a double breakout structure. Meaning that before we can start looking for anything here, we need to make sure that this high was already taken out and it gave us what? A market structure shift. So the moment it gave us a market structure shift, we already know that we're looking for what? Bullish moves to the upside. Now, we don't just jump in when you see that market structure shift and you start buying immediately. No, there are other criteria that follows for us to now pick our entry properly. So after this, after we got that market sheet and we looked downwards and marked out the possible zones price can come to, which is first of all, this breaker block zone, the zone that price took out because it's a valid POI, a breaker block. Then the other block zone down here that price can also react from. 2 of them are valid points of interest that price can actually come and pick up from. But the first rule says there needs to be a market structure shift or a double breakout structure. And you can only pick one point of interest. Most people you see on their charts, they will draw this POI here, they will draw another POI down here. They will take trade from the first one. If it fails, they will not take from the second one. Maybe that one will hold. Or sometimes they will draw the first one and the second one, and price may not respect the last one they drew and pick from the one that they drew up. They don't know the one price wants to respect because they don't understand the rules of liquidity and picking a point of interest correctly. So the second rule in picking a point of interest says there needs to be an inducement / liquidity, because inducement is a type of liquidity. So it means that after you get your market structure shift, you need to ensure that price gives you that valid pullback you want in the market before price continues in the direction it intended to go to. So in this scenario, after price gave us this market structure shift and the candle closed, the next candle that comes out made a retracement to the downside with this and then pushed back up. This retracement right here is what your inducement is. This is last week's setup. I'm using it to teach you guys so you understand what happened in the market. So now you have the first rule that says there needs to be a market structure shift or a double breakout structure. And then the second rule that says there needs to be an inducement or liquidity, which means that this pullback here is our inducement, which is what the second part of picking a point of interest. Thirdly, the third rule says the point of interest needs to be unmitigated. Now, first of all, mitigation means price tapping into a point of interest after there has been a market structure shift or a double break of structure. Let's say we had market giving us lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then there happens to be a market structure shift. So right here we have like a breaker, and down here we have an order block. Now, mitigation means after price gave over this market structure shift, during the process of inducement being created, price comes down and touches any point of interest before pushing back up. This zone, this particular POI that price touched, has now been mitigated. So it means that any point of interest market touches during the inducement creation process has been mitigated. Mitigation is not valid if it happens before a structure shift. If market has not, let's say price did not shift this structure, it just came here and closed and did not break this high, then pulls back to touch any zone here before pushing out to break the high, it's still not mitigated. It still did not mitigate that zone. Mitigation should be valid when it happens after that market structure shift or a double break of structure. Are you guys following me up? Mitigation means price touching a point of interest or tapping into a point of interest after there has been a market structure shift or a double break of structure. You cannot have mitigation without there being a double break of structure or a market structure shift. That's not a proper mitigation. So mitigation should only happen when there has already been a market structure shift or a double break of structure. Then that's when price now comes to tap into a point of interest while creating inducement, you can say that zone, that mitigation, that zone that it tapped into while creating your inducement has been mitigated. So for an example now, you have a structure shift here, then you have points of interest here like this breaker block and then this other block. During the inducement creation process, price touched this breaker before continuing moving towards direction it shifted structure into. That automatically means that this breaker block right here that price touched has been mitigated. So therefore, you can no longer use this breaker block as an entry. It has been disqualified. Any POI that price mitigated during the process of creating your inducement, you can't use that point of interest as an entry anymore. It's already disqualified. So when price mitigated this particular breaker during this inducement creation process, we're already disqualifying this particular breaker here. You can't use that breaker as an entry anymore. It's now left with only this POI down here, which is the other block. So he's saying that any point of interest you want to pick for your entry, ensure that price has not yet mitigated it. If this is the whole downtrend, then the structure shift occurs and price closes here before the next candle comes out. When price closes, you have to look down to find possible POIs, which is left towards this breaker, then the other block that triggered the move to happen down here. So these are three possible points of interest that you can pick as your entry. If you follow the first rule that says there should be a break of structure, a double break of structure, or a market structure sheet, you already have that structure sheet when this high got taken out. The second rule that says there needs to be an inducement or liquidity. So during the first pullback that price gives you, that's where you'll be expecting your inducement from. So price will give you that pullback before pushing back up. You mark out your inducement. The third rule says the point of interest needs to be unmitigated. So you have to now look at the zones that price touched while it was creating inducement. Then you disqualify them and leave the one that price did not mitigate during the inducement creation process. So now, if you pay attention, this is the only zone that was mitigated when price was creating inducement. So you have to disqualify it. It's now left for this breaker and then this other block down here. Same thing as this scenario. And in this scenario, same thing. When price gave over this market structure shift, it was left with this breaker and then this other block. But when price came down to create inducement, it did not touch any of them, meaning that two of them are still valid to be used as an entry. In this scenario, the only one valid to be used as an entry is just this and then this. This one is already disqualified. In this scenario, the only one valid to be used as an entry is just this one down here. This one is already being disqualified. So we now have to follow the last rule for picking the point of interest. And you now know the POI to pick. So the last rule now says, pick the point of interest closest to your inducement. That is the last true. So in this scenario, you have to pick your entry from what? Here. For this scenario, keep your stop loss at the last candles of the other block. In this scenario, you have to keep your entry what? Here. Because this is your inducement and this is the only one closest to it. This is already disqualified. It's less for this two. This is where your entry would be. Stop loss there. So in this scenario here, this is where our entry would be. Since these zones are still valid and our inducement is here, and none was mitigated by the inducement. So we still have these two zones valid and they all follow the rules in picking a point of interest, unmitigated, they have inducements. But the one closest to this inducement between this other block here and this breaker block is what? This breaker right here. This is where the entry would be. Then the stop loss for this would be at the last candles that makes up this breaker. The last candles that makes up this breaker is what? This other block candle and then this one. So here would be your stop loss for this trade. So this is where the trade would be. See the trade right here. I'll say teach you guys take profit levels. This is just picking points of interest. So now this is a 1:10 risk to reward ratio trade. Just targeting the nearest high, 1:10. Now I understand my stop loss placements. Now, if I didn't know better, what will I do? I'll keep my stop loss here. Then this makes this trade a what? A 1:3 risk to reward ratio trade, right? Meanwhile, if I understood how to properly pick my entries, I understood where to keep my where to keep my stop loss, and because I know the specific point of interest I'm picking. Hope you guys are following me up, please. Now, also, sorry. Now, when it comes to picking a breaker block, you don't pay attention to the wick of the breaker. It's always the body of the breaker block. It's always the body of the breaker block that we pay attention to. Always the body of the breaker block. If market mitigated the wick of the breaker while it was creating your inducement, that breaker is still valid. And then for people that would say, what if market mitigated the wick of your other block? How would you pick it? How would you pick it? Now, you know that there's how you pick an other block when it has wicks. For example, now, if this is your other block, a bullish other block, and then it has a wick. If the wick of the other block is smaller than the body, we will normally pick our entries from where the wick. So if this is the kind of other block you have, and after price gave you a structure shift, while it was creating inducement, it mitigated that wick. It means that this other block has already been mitigated. You can't use this other block as an entry anymore because it's already been mitigated. But a scenario where the other block is this, let's say this is the candle of the other block, and then the wick of the other block is extremely long, longer than the body, and then price, after giving a structure shift, mitigates the wick of this other block, you can still use the body of this other block and take your trade, because for it to be mitigated, price needs to mitigate the body of the other block. But if it's a breaker, if price mitigates the wick of the breaker, still use the body of the breaker. We pay attention to the body of the breaker and not the wick of the breaker. So these are all the rules in picking a pointer. So these rules will tell you which POI to me. So now, knowing already how the point of interest I'm picking my entry from, there is no need keeping my stop loss to exceed that point of interest I'm picking my entry from, because market on a normal would not even go beyond their POI to go to another POI to give me an entry. Because if I had kept my entry at the other place I was keeping my stop loss, price would not get there. So my stop loss for this show will be at the last candles that makes up that POI that I'm picking, which is what? This, and then this bearish candle. This is what? The breaker. So this is my stop loss will be. 1:10 risk to reward ratio trade. The first one. This is last week's trade. I'll move on to the next one. Now, I want to show you guys how all these entries for BTC was gotten. Now, we've already gotten this first trade, the market structure sheet that confirms that we are now changing structure to the upside. Now, like I told you guys, reversals is what you trade market structure sheet with. But once you've already confirmed reversals, you now continue maintaining that current trend of the market. You now use a double breaker structure instead. So now we already know that market is already bullish, but for us to now continue looking for more buys in this scenario, we're now focused on double breaker structures rather than market structure shifts. The market structure is the first time that price would reverse. For if it's been selling for a long time, before you can find buyers to the upside, you have to focus on looking for what market structure shifts. But the moment price has already started reversing to the upside and you're looking for what continuations to join that buy, you focus on double break of structures. So in this scenario, price took out this high, and then this high, then this high. The moment the candle that caused that double break of structure closed, you have to look down to find possible points of interest. If you look at the possible points of interest, we have what? This breaker block here. We have our what? Another breaker block here. Then we have what? This breaker block here. So we have what? Like 3 points of interest with even another block here, but the other block and this breaker are basically on the same line. So it's the same thing. So we have like around 3 possible points of interest that you can pick as your entry. Most people get confused when these kind of things happen. They're confused on the POI to use because they are not sure. So the first rule says, ensure there's a double break of structure or a market structure shift. So the moment you got the double break of structure, we counted the first part of the strategy, this double break of structure. That is the first rule. I'll name it DBOS. Second rule says there needs to be an inducement or liquidity. Now, the first pullback that price will give you after that candle that caused that structure shift or the double break of structure to occur, once that candle closed, the next pullback that will come or retracement is what your inducement is. So when price put down here with this candle weak before pushing back up, that is what our inducement is. Now remember, the points of interest we have is this. We have this breaker, then we have the other block down here. Now, mind you, this other block has not been mitigated. The reason I said so is that mitigation only occurs after a double break of structure or a market structure shift. So had it been this other block was the right entry, price will still respect it, regardless of this week that market wicked this POI before pushing up, because price has not yet broken a structure or given us a structure shift. I can see this as an on entry. So now we have how many POIs? This, and then this OB. Now, the second rule in picking a point of interest says there needs to be an inducement. So we already marked that inducement out. And the third rule in picking a point of interest says that the point of interest needs to be unmitigated, meaning that when price was creating inducement after the double break of structure or the market structure shift, ensure that price did not mitigate or touch any of your point of interest that you're looking to pick. But if you pay attention, when market was creating this inducement, it actually touched this particular breaker block here. That means that it's already disqualified that breaker. Now it's now left with what? This breaker block, then this other block down here. Now the last rule in picking a point of interest says what? Pick the point of interest closest to your inducement. So we have how many points of interest left? This breaker and then what? This other block down here. But which one is closest to our inducement? Is this particular breaker block here. That's why the entry for this trade was from where? This particular breaker block here. And the stop loss for the trade would be at the last candles of the breaker down here. This was the trade. Still another 1:10 risk to reward ratio trade. 1:10, 1:10. You're getting 20 risk to reward ratios in total now. Hope you guys are following me up, please. I hope you guys are not lost. Hope you guys are following me up, right? And the time frame does not really matter, but if you're a day trader, I would recommend looking for your entries on the 30 minutes time frame, 45 minutes time frame, somewhere between 2 hours and 3 hours time frame. That's the best time frames. They all align. 30 minutes, 45 minutes, 2 hours, 3 hours. They all 2 hours, 1 hour, 3 hours. It does not really matter. You understand? So there's no, they all align together. So now this was the second entry. So most people now that would have picked from this other block, they will get a missed entry. Most people that would have picked from the other block here also would have also gotten a missed entry. Simply because they don't understand the rules in picking a proper point of entry. So we're now 2 for 2. The first entry and the second entry, 1:10, 1:10. Now, if you are still in the mood for it, because we know that market is still bullish, because it was previously bearish and we got a structure shift that confirms the bullishness. We're still going to focus more on what market on double break of structures rather than market structure shifts. Market structure shifts is to confirm that reversals. Once the reversal is already in transit, to now get more entries to join the reverse, to join that new trend, you look for double break of structures. So now, in this one, what I'm not going to look again for is what a double break of structure. Sorry. So now, when the moment price took out what this high plus this formal resistance level here, we got what another double break of structure. I'm giving you guys an example with the trade that happened last. This literally happened last week. In fact, I think Thursday. Oh, let me check the day this happened. Yeah, Thursday. One day. This is 1 day setup. 1 day, 1 day, 1 day. I'm giving you guys so you guys understand. This is 1 day setup. So now we have the double breakout structure first. After that, you look for the next part of your strategy, which is what the inducement. Now, after that, when price came here and gave us now, inducement can be now if market is very volatile on this time frame, your inducement will probably be just single candle wicks as long as it makes a retracement, kind of any slight retracement, a pullback a week, that is an inducement before price continues what pushing back to the upside. So after the double breakout structure, we got the first rule. Second rule says there needs to be what an inducement or liquidity, which is what this pullback here is our inducement. The third rule, now after market closed above this zone, we have to look below to find possible points of interest. And our possible points of interest we have is this breaker, this breaker, this breaker, this other block. Now, this is where people get confused. In fact, I'm sure most people here got confused about this particular setup. So now we have possible 1, 2, and 3, and 4 points of interest to use as an entry. Now, the third rule says the point of interest needs to be unmitigated, meaning that when price was creating inducement, it needs to not have touched any of the points of interest that you want to pick, and market did not touch any POI here, meaning that all these points of interest are still qualified to be used as an entry. We can only use one. And the last rule says pick the point of interest closest to your inducement out of all these POIs. The one closest to my inducement is what this breaker block is. This is what my entry for this trade is. Stop loss is supposed to be all the way down here. But with experience, you should keep your stop loss down here for you. But I kept my stop loss here because I knew that there were 2 points of interest here, this and this. Now, since this is the one close to inducement, price would not likely get to the second one here based on the rules of picking a point of interest. So because I know price should not get there, I kept my stop loss at that breaker block here because you already have a breaker here, another breaker here, another breaker here, knowing that the one closest to inducement is this one, but the candle is so large that it actually engulfs into the second breaker. I will still keep my stop loss at the second breaker because it's not a valid point of interest for price to use to buy. That was why I kept my own stop loss. Keep your stop loss where it's supposed to be until you advance to the level that I am on based on trading this particular strategy. So this was the trade. So targeted this other block here. 1:9 risk to reward ratio trade. So now we're what? How many? 3 for 3. First, 1:10. 1:9.3, obviously. Second, 1:10. Last, 1:9. Now, let's assume that you have a $100 account and your first trade, you risk $20. I'm trying to bring it down to this thing. You risk $20. 1:9.3. Let's just say 1:9. You would have made $180 on this trade. Now, let's say $100, you're risking 20% of your account. That's $20 for the first trade. You made $180. You add it to your $100 account. $280. Second trade, you risk the same 20%, $56. Second trade, you got the 1:10 risk to reward ratio trade. That is what, $560 plus your $280. You have $840. Last trade, 1:9, 20% risk. $168 risk times what? You made $12 plus the what? $840. You have $2,352 from $100, risking just 20%. I'll go again. You have $100 account, you risk 20% the first trade, that is $20. This is a 1:9.3 reward ratio trade. The profit will be $186. Add it to $100 capital, you have $286. Second trade, 1:10. 20% risk again, $57 risk times 10, $572 plus what? The $280, you have $852. $852, 20% risk times this one, 1:9 plus 852, I'll be 892. Let's just say it's 852. You have $2,385. Using $100 account, risking just 20% per trade, you would have made $2,385. If you take out your $100 account that you started the trade with, you would have made $2,285. In Naira, that is about 3.5 million Naira, just with knowing how to properly pick an entry. You see how it actually increases your win rate. It increases your risk to reward ratio also. In fact, if you stuck to risking a fixed amount, it will take you losing 10 times to lose one profit you made on a single trade based on the first trade that we took. You guys understand? So it's not really something that, it's not like you see me and say, I'll be like, oh, the RR, how is unrealistic? It's not unrealistic. Most people would have taken this trade, and this trade will be a 1:3 risk reward ratio because most people can actually keep their stop losses here, which is not bad for their trading system. That's how they trade. But understanding the concept I trade and I pick specific points of interest, my stop losses would be at the zones where it's actually meant to be. Most people now say, oh, your stop loss is not too small. It's at my invalidation zone for my trade that I took. That is what my stop loss is. So this trade would have given a 1:9 or 1:10 instead of a 1:3. If it was $20 risk and it was a 1:3, it would have just made that much, $60. But understanding the concept of picking a proper point of interest with these rules, it will tell you, based on the points of interest you picked, where your stop loss is actually meant to be, based on your point of interest that you pick for your entries. So this is BTC. This is what happened last week, and I'm see the same thing happening again. Even after that, price took out what? This high and this high here, this one here, this one here, double breakout structure. This is the pullback. This is what the breaker block is used. Stop loss should be down here. There's the buy that is still ongoing now. Stand or whatever. The market is still. So you understand? This is the same thing over and over and over and over and over. Same concept over and over. Till your price actually reaches a zone of reversal, the market is going to reverse. And once it starts reversing, I'll teach you guys about different types of liquidity, but price will now have to now take out all this trendline liquidity that was built here. But most people will now be expecting to see continue looking for buys at zones here. But the moment price reverses and breaks this trend, it will not buy from any zone here. It will sell until it takes out this trendline liquidity. But we are going to get to that in the next class, not in this particular class. This class is just the picking points of interest. So this is just the price action on BT that last week that I taught you guys with the rules in picking a point of interest. Every other block you saw in the market, every breaker block, there's a reason why price picks your entry from here. There's a reason why price picks the entry from here. It's not random. There are rules in picking a point of interest, and don't ignore those rules. Once you ignore them, you're already messing up your trading. There are rules in picking a point of interest. So you have to get this rule down. Whenever you're taking a trade, I've already crammed the rules. I already know it offhand, but you have it somewhere before you pick a trade. Check your trade. Does it fit the criteria of these rules that Iyke gave you to look at before you pick your entry? If it does not, don't take that trade. It's a low probability trade. That's why most people say A+ setters. It's not A+ setter because you cannot hit stop loss. It's A+ setters because it meets all the criteria of picking a point of interest based on the rules that you follow in picking a point of interest. It meets all the criteria. So that's what most people don't understand. So you understand. So the more knowledgeable you are, the more you do things that people cannot do on the market. The more you catch a trade that gives you 1:10 risk to reward ratios, and another person called the same trade that's giving them 1:2 and 1:3, and they keep wondering and they tell you that it's unreal. It's not unrealistic. You're just more knowledgeable than them. So this is just a simple thing. So you guys, so once you're done with the class, if you have questions, you can just use the icon here and raise your hand so I can pick you up with your questions. So, but eventually, I'm not telling you guys that it's going to happen overnight. Do you understand? I don't do live sessions. I don't trade live. This is not a signal group. That's not what I'm here for. I'm here to teach. So, backtest this thing is easy. Trading is not, in fact, trading is not easy, but it's easy based on technical analysis. It's only difficult when your emotion sets in. The emotion sets in, you start rushing to make an analysis, you start rushing to place a trade, you fund ASAP and you start looking, sound like all those kind of things. Someone is asking me for the best time frame. I say it already, there's no best time frame. You just switch between time frames and find the one that best suits the setup you're looking for. But if you're a day trader, mostly 45, 30 minutes, 1 hour, 2 hours is enough for you. So there's this icon here. So I'm going to pick you guys up for this. And so if you are having difficulties, you have to watch the recording for the class. So yeah. SMS me. What's your question?
Hey, sir, how are you?
Yeah, good evening.
My question is, in a scenario, for example, I'm analyzing, and then I opened an M30. I saw a market structure shift. It met all the three criteria. But when I switched the time frame, for example, on a 2 hour, I see again another market structure shift, an inducement, and a POI. Let's say it was a breaker that wasn't mitigated. In that scenario, which time frame should I follow?
They all work the same. I want to give you as an example of something. There was a trade that once you switch time frames is another thing. I'm trying to look for that trade. It's a different thing, but it's also a different thing when you switch time frames. It doesn't matter the time frame you are on. It will give you, if you analyze properly, this time frame, this 45 minutes time frame, this was a market structure shift. We got inducement. Then the points of interest you have here is this breaker and then this other block up here, 2 points of interest. Now the inducement is right here. They are both unmitigated. So the closest one to our inducement is what this breaker block. This is our entry for this trade. Now on this 45 minutes time frame, it's what a market structure shift and a breaker block. But if you go down to 15 minutes time frame for say 15 minutes time frame, this is what this is not a market structure shift, but this is a double breakout structure in the sense that price was already bearish. The moment it took this low out and this low out, it became what? A double breakout structure. And once price closed below here, the possible points of interest up here is what? This breaker block here and another breaker block here. Well, this and this are the same line. So you have what? Two possible POIs here. Now, after that, it's now left for you to know the one to pick for your entry. Now, the third rule says the point of interest needs to be unmitigated. So when price was creating your inducement, it actually mitigated this particular breaker, this one here, but it did not touch the body of this breaker block here, meaning that this breaker is still valid to be used as an entry. Now, the last rule, pick the one closest to your inducement, which is this breaker block here, and our stop loss below the last candles of the breaker. So is this and this makes up the breaker block. So our stop loss will be here, our entry will be here. Now, this is where we'll take our sell from. Most people always complain about time frames, and time frames does not really matter if you analyze properly. This was the trade. It is still a sell on 15 minutes time frame, but with a different concept that I still taught you guys. Is a double breakout structure on 15 minutes time frame, is a market structure shift on the 45 minutes time frame, but everything still ended up on what? The same point of interest. Time frames, just know how to analyze. Most people are too focused on the wrong things. Know how to analyze. Regardless of the time frame that you switch, you will find your setup there, and it's all going to be enclosed inside the same POI zone. Do you understand what I mean? You guys understood what I meant. I don't think you guys understood what I mean. Analyze properly. Once you analyze properly, it does not matter the time frame. You will get it. Watch 45 minutes time frame, market structure shift, 15 minutes time frame, double breakout structure, but I still arrived at the same point of interest, regardless of the time frame that I used. Right.
Hello, Tony. Good evening. Can you hear me?
Yeah, I can hear you. Good evening.
Thank you very much for this opportunity. The lecture is magnificent. It's so inspiring. I'm enjoying it so far. So my question basically is not really related to what we've done today. Just basically asking where do you trade your crypto from, the broker you use for your crypto? Do you use crypto exchanges, or you use like a brokerage?
No, Xness. You can trade your broker. You can trade your crypto pairs on brokers now. Xness, I trade on Xness. You can use FSTM, Xness, basically any broker you have, they offer crypto pairs too.
Okay, just because some of the brokers they do have like big spread, hence why I was asking.
Oh no, I use Xness. You can try the Pro Xness Pro. I think it will reduce the spread or raw accounts or zero spread accounts, but they charge commissions. So
Okay, all right. Thank you very much. Appreciate that.
okay. Yeah, Osai Vibe. I don't know your name. I'm asking you to unmute, please.
Oh, okay, I am on mute. Good evening. It's pronounced
Yeah, good evening.
Osaivie.
Okay, Osai Vibe.
Uh, yes. My question is with regards to the what's it called? The inducement.
Okay.
Most times when you're picking your inducement, I noticed it's always with the candle wick. So my
Yeah.
question is it always with the candle wick? Because from the current BTC buy that is ongoing, when
Mm.
I checked from the 30 minutes time frame, what I saw as the inducement, to me, I don't know if I'm right or wrong, but what I feel is the inducement was a bearish candle, and
No.
it's more like a Marabuzo candle.
The inducement is the first pullback that you get, or the last one before price continues pushing towards direction that double breakout structure occurred or the market structure occurred. Pay attention. Once this candle closed, the next candle that came out was this, but it pushed down before eventually pushing back up. That's
Yes.
any whether it's a week or the body, what no, as long as that was the last move to the downside before price continue pushing back to the upside, that is what I'm going to mark as my inducement.
Okay. Will it be safe to say that it's the immediate candle after the one that causes the breakup structure or the market
Yeah,
structure shift?
yeah, it can be the but now why I don't say it's the immediate candle is because price can actually do something like this. Let's say double breakout structure occurs here, then the immediate candle that comes out did not push up. Let's say it pushed up a bit here, then came down again, then pushed up a bit. I can call this my inducement, provided that price did not mitigate any point of interest while it was making this second move to the downside. Do you
Okay.
understand? So this can
Yeah.
still be my inducement, because if you call this your inducement, what about this one? And why I picked this as my inducement, because price actually, this was one that actually broke the last high here. This one broke this last high here, so it's a valid inducement. Do you understand what I mean now?
Okay. I don't think I got that last part, talking about the one that broke
The
the last
last,
high.
if this is a breakout structure, price gives inducement. Yeah. While pushing
Yeah.
up, this was the last high in the market after that breakout structure occurs. So normally for my inducement to be extremely valid, I know I need to make sure it takes out this last high here before coming back to
Oh,
now trigger my point of interest. Anyone that
okay.
doesn't is actually a weak inducement, and is actually, I'm going to be skeptical taking that particular setup. Do you understand?
Oh, okay.
Mm.
Meaning, what I thought was my inducement what triggered the move. All right, it's fine.
Yeah,
Thank you.
yeah. Also, you
Because
guys, okay, what
sorry,
is it? Yeah, no, go on.
no, I wanted to say what I marked out as my point of interest
Yeah.
in this particular buy that is ongoing is
Mm,
actually this place, the place where you mark out this POI from.
mm.
That's
It's
when
wrong. Yeah, it's
yeah,
wrong. It's
that was
wrong.
when me I map out as my inducement. Then I was actually waiting for the price to come down to the other blocker to the bottom.
I don't know, it's wrong. Also, you guys you see why it's good to also, most people say which time frame, which time frame. Switch time frames is very, very important. It actually helps give you a better entry. You see, on the 45 minutes time frame, this is what my stop loss was. But on the 30 minutes time frame, this is the last candles of the breaker here. This and this. So this my stop loss has actually been here, and it would have increased my RR, and price would not still take me out. Can even give more space for spread. So you can actually change time frames to get a better entry. It does not take time for you to change time frames. It does not really take time. It's very easy for you to do. But most people are lazy to do that. and they stick to one time frame. Well, well, whatever.
I think.
Yeah. Is it?
Okay. Yeah, thanks a lot, Tony. Just wanted to, I have like two questions. The first one is around um your own definition of order blocks, breaker blocks. I mean, we're coming from like different lessons. So some of us, they've told us that for you to have like a proper order block, there has to be some kind of imbalance that. So maybe it would be good to just hear your own definition of a valid order block. Then secondly, um for a breaker block, right? In a scenario where, of course, it's a failed order block. So if it fails the first time, it becomes a breaker block for you to do the reverse entry, right? So if it fails the second time coming back, right? So what happens then? Do I then reverse? Does that breaker block, is it still valid as a breaker block to then do like another, opposite entry, or we
I
just have
don't
to
think
move from
so.
there?
I don't trade that kind of concept. I think people that trade is called Quasimodo. I don't pay attention to those kind of entries. If it invalidates the breaker block, then the breaker block is already failed. But most people use it as a reclaimed block, but that's not an entry model that I use. If it fails, that means that I'm wrong with like maybe the trend is already changing or something like that. So I just like ignore the whole thing, that taking it as a loss, and I will rest. But I think other people use points of interest like using a reclaimed block, but I don't really use that. And I also don't use imbalances. Like I said, I learned how to trade this particular strategy by myself. It was something that I backtested to learn. So the imbalance, the whole thing, I don't do that. I simplified it in a way to my own logic, and it works for me very, very well. So you don't need all those imbalances and all this sort of stuff. I've never needed it. I don't trade with it. In fact, I don't even know how to trade it. I didn't study it. So that's just it. Stop sending them AI companion now. Who is this person? Amy White, stop. Goodness.
Hello, good evening, sir.
Yeah, good evening.
See, I have a question. I've been following you for a very long time on your Twitter. So even before this class already, I think I have a little bit of knowledge on breaker block. I don't know if you can diverse a little. I don't know. Can you please open GBBJPY chat on your screen? I want to just show you a little bit of question, please. I don't know. GBBJPY on the 45 minutes time frame. Okay. Okay. So there, you just go forward a little bit, please.
I'm coming. I want to clear this thing.
Okay. There, I was following your IG. You talked about GBP being bearish. So me when trading, I say let me just practice what you thought about breaker block, but then you've not really explained this concept. Like after you've seen a market structure shift, you've not really explained the concept of double breaker block. If you see there's this breaker block, sell breaker block that failed. If you look at this at your left here, under the 31st before August, look at the 31st. There's a breaker, a bearish. Can you see it? Yeah. Somewhere there. There's a breaker block there that failed. No. You calm down. That's for my own marking. Just calm down, please. Calm down again. Calm down. Bring your PI down. Yeah, bring your PI down. Yeah. Yeah, so if you extend it, I tried using that breaker block to take a sell last week, and the sell just lasted for some minutes before it reversed back to SS. So I don't know, was there anything wrong here? Was there anything wrong here in this trade? So I
Like
wanted
I said, yeah. Aside from the concept of picking your entries, there's also a concept of take profit levels. If you pay attention, I kept my sell at this level for a reason. This was where my entry was, and this was my take profit level. So this was my entry. and my take profit was here. I have a reason. There are possible zones that price can actually reverse from. And if you pay attention, there's actually where price is already reversing from on this level. I think yes, this breaker block here. There are zones that can push markets up. This is an inducement. There's a breaker here. I'm price already buying from this level. So I was already with this, well, I'll just take profit levels so you understand how to take your profit in the market and not as price already hit a zone for reversal and already cleared the nearest drawn liquidity, which is this trend line liquidity here. See, like I said, you guys should just calm down until I'm done teaching. There's what you call take profit, this trend line liquidity. Price already took it out, and there's an inducement here. This is also a breaker. Price may actually react from here, so I'm not going to be focused on looking for more sales here when I don't know if you understand what I mean.
Yeah, I'm trying to piece, but my question is this: I don't know. Sorry to interrupt you. I want to ask, in this scenario of this sale, let's just say the sale played out. Does this scenario of this sale setup, does it meet a criteria for you to like enter a sale setup? That's what I want to.
This is actually what I would do. This is a double break. This is where the double break was such occurred. Price took this low out, then took this low out, and then here this low also. So after that, it gave us this pullback with the wick. Before pushing back down, the nearest point of interest is this particular breaker here. Just this one.
Ooh.
That was this sell to this zone, and I actually took this zone. So yeah, I get a bigger screen, look at the chart well. You understand the zones that price right. Oh, the market not just reverse from nowhere. That's a breaker. So already sold from this breaker. I don't really think this was going to work again because we already sold from this particular one. Don't worry, when classes go, more classes go on, you understand take profit levels and the whole buyer stuff. For now, just take it as it's like what I teach, follow the same pace as I teach.
Okay, thank you very much, sir. Thank you.
You guys' question is too much, and it's already 9 o'clock. It's supposed to be a 1 hour class. I will take a few more questions. The rest will come to my DM. So please, if I ask you to unmute, just unmute fast because I have to actually get to doing something else. It's supposed to be an hour class.
Yeah, hi, Mr. Tony. How are you doing?
I'm very good.
Yeah, I'm okay. I just have two questions. My first question is for the inducement for order block. Can we if the analysis is going and there's no a long wick, like the inducement ends in a body candle without a wick, is it a valid inducement? That's my number one question.
It's a valid inducement, yes.
Even though it ends with a body without a wick,
Yes, it's a valid. It does not matter how as long as they pull back, it's an inducement.
Okay, on both sides, it's supposed to be on the two sides.
How?
Like you draw a line from the left to the right or from the right to the left. So if the two sides are both the candle ends on body, is it a valid inducement?
As long as it's the first pullback after the structure shift, then price is an inducement.
Okay. My second question is if when you were teaching us about the engulfing, you make about the other block, you make example like we must always use engulfing other block. So that particular engulfing, the small one that the big one is going to engulf, if the rejection candle breaks it, is it still a valid other block?
I don't understand.
Like what I'm trying to say is the other block, the engulfing other block for the confirmation. My question is the smaller, it is going to be two. There's going to be a small one and a big one, which is the engulfing. Yeah. So my question is the small one before the big one. If the how will I put this English? I don't know how to put this English. But the one is supposed to tap in it and go and keep and reverse. So the one that is tapping in it, if it crosses the small one, is it still valid? Or it must just tap it and go?
So I don't understand your question at all. Did he hit stop loss?
Yeah. I'm talking about
I,
engulfing
I,
order block.
I don't understand. I don't understand your question at all. There are a lot of people here wanting to ask questions. I don't know the question you're teaching. In fact, if I see, guys, if I've not taught something here, don't even ask the question again. If it's not something that I taught, don't bring it up because just follow as I like. There's no way you follow what I taught and you not see it on the charts. Everything that I've literally taught, if you guys have not seen, if that's not what you're about to ask, please don't ask the question because there's no point to it. Just follow what I've taught you guys. That's all you need based on this strategy. As I'm teaching, follow what I'm teaching. I have 16 questions here, and I don't even know if I've taught things that requires people to ask these kind of questions. I don't really understand your question.
Yeah,
So
but this
sorry, I have to state it's already more than an hour, and I don't know understand your question at all. So let me just go to the next person. Yeah, but for some people here. Please let the question be reasonable. Please let it be about this particular topic, sir. And only what I thought. Yes.
Please, based on what you thought, you said the 4 rules of picking the point of interest. One of it is it needs to be unmitigated, right?
Yes.
So, please, can you go to your chat? I saw one on your BTC, the one you analyzed for us. I think
Okay.
the third, okay, the 1, 2, 3. Yeah, the third trade, yes, please. Yeah, from the breaker block there's a week. I don't know, is it an inducement? Is it not mitigated or is it not already mitigated already?
How?
Like the third trade, like the third
This is third trade, yeah?
1, 2, yes, yeah. The
So
breaker block there.
how was it?
You see, there's a long week that's crossed along it.
Which long week? This week?
No. The breaker block. No.
Is it this?
You got the breaker block. Yes, from there, come forward. No, forward. Yeah, that's yes, this one. This the week there.
How did he mitigate the breaker block now?
I thought you do a breaker block from the back.
The breaker block was on another time frame here. 45 minutes time frame or something. This is this candle. Remember, is here. The mitigation is after a break. I said this in a minute. I said the mitigation is after a break of structure or market structure, not before. The market did not, I'm not giving us a double break of structure here now. This did not break any zone. It came here with the week and came down. It was only when markets, and you guys know when I mentioned this in a minute, I said you cannot have mitigation. I said it in this class. Most of you guys should actually come down, pay attention. I said it's mitigation after a double break of structure or a structure shift. This was when we got that double break of structure. For you to not have a mitigation, it means that price should now come back and tap this zone, not before the break of structure. You cannot have mitigation before a structure shift or a double break of structure now. You guys know when I said it in this class. I actually said it when I was teaching.
Okay, I will go through the recording. Thank you.
Zoom user.
Good evening.
Yeah, good evening.
I watched some of your YouTube videos. I'm not asking questions about that, about what to learn today. The breaker blocks. When you're drawing it and there's a large candle, you say you don't focus on candles for breaker blocks, only the bodies.
Yeah.
Now, if the body is extremely big, will you mark that extremely big body, or you just mark like it's the up part? You know what I'm trying to? I don't know how to explain what I'm trying to say.
Yeah, I know. Why did you start the class early with us? Like, were you in the class when I started teaching, like from the onset?
Yes, but I got disconnected at some point.
Okay, I mentioned something like that. There was an example I gave, and I said, this candle is it engulfed into the other one, but with experience, don't. It's in the recording. I think if you watch it, you'll see. I gave an example like that.
Okay, thank you very much.
Yeah. Yeah, I can get me.
Thank you very much. My question is about this other block that did it's on Euro GBP, please. I got confused there. It did double breakup structure, but on the 2 hours are like 2 zones. So I'm like, my question is, if you were in my position, which zone would you want to take? Euro GBP.
Where? I'm on Euro GBP now.
Yeah, 2 hour time frame.
Okay. Yeah, so where? What happened?
There are 2 other blocks there. There's one here and there's one at the extreme bottom. The one that price is close at right now as an inducement.
Wait,
The one at the,
are you looking for a buy?
yes, if I'm to look for a buy.
You know, I told you guys that you guys should come down to classes that don't. This is not a bullish market. This is an extremely bearish market. This price is already selling from this breaker block. And I said that's how you take your profit. Well, you guys should just calm down until classes are, I've not even thought about directional bias. If I've thought directional bias, we know direction that you're meant to be trading in. Just you guys should relax. Go faster than your shadow, so relax. Market, wait until I'm done teaching before you go on the live market. Now I said it in the last class. You have to get liquidity where price is going to. You have to still get directional bias. Calm down. Do you understand? Calm down. You should not be looking for a buy when the market is bearish. You should not be looking for a sell market is bullish. Calm down. Nobody won't come down again. Me say if I'm more,
You okay?
I'm tired though, because you guys are asking me questions about things that we don't want to calm down. The questions are not making sense. I've not touched these things. I've not taught directional bias. I've not taught different types of liquidity. You don't know where my price is going to. You have to calm down. Calm down. I'll try and answer this question, Sha. Amy White, I hope say no be that question why they see for comments where you want to ask me, Sha. Ask your question.
Hello,
Yeah. Hello.
please can you hear me?
I can hear you.
I'm looking for a valid inducement and an invalid inducement because some ends weak and some ends body.
Okay, so like what's your question?
Please, I would like you to go to the charts, any of the charts, just for you to show me a valid inducement because some end with body and some end with weak. And so I don't know.
You are here when someone, I don't know if you're listening to the question that someone just asked. The person asked this exact question you just asked. He said, what if it ends with a week? It does not matter. As long as it's as long as they pull back.
What's a valid one and invalid one?
I said because if it takes out the previous structure, I don't know. I said when price calm down, when price uses a structure shift or double break of structure, then it pulls back. The retracement should take out the previous. Someone asked this question here and I answered the question. It's in this recording. You guys should calm down and watch the recording again. If it takes out the previous high when it does its
from the start.
Why now? Amy, why they do like this now? Why they do like this? Not enter class on time, they do this kind of thing.
Sorry about that.
Then wow. Hey God.
Okay.
No. Hey God. Easy.
Good evening, everyone. Good evening, sir.
Good evening.
First of all, I think what Amy is trying to say there is this for me, because I had that same question to ask. Because on the 45 minutes time frame, when you were analyzing BTC, that first pullback it made gave us a week before the candle later turned bullish. You understand? But in my own point of view, I think what we should be doing, or what I learned from you, is that depending on the time frame, if you give us a week pullback before turning bullish, the first pullback should be our our inducement. Or depending on the time frame, if you give us a bearish, even if it closes with the body, we should pick that as the inducement. I don't know if I'm right or wrong.
you don't even need to look at the body bearish, bullish. Maybe this is a pullback, yes. Should the pullback continue the structure shift or the break of structure? Yes, that's my inducement. Whether body or whether week or any time frame you are will give you on a different thing, but it's still going to be the same concept of what you're trading. The how it happens does not matter. The main thing is that you understand the logic and you can trade the logic that you know. That's just it.
Okay. Okay. And lastly, please, because I've watched a lot of your videos, I'm just waiting for like my main questions is going to be on that directional bias. I guess you will be teaching that at the last class. So
Yeah.
my question for today is, because I don't want to bug a lot of questions. I watch a lot of your video. I'm just waiting to ask some valid questions. My question to today, like, my network failed. At that time, you were like giving us where to mark out what's it called, our stop loss, like talking about that breaker block. Like we rule our breaker block, it has to be. It was that point my network took me off. I don't know. Please, if you can just like give me a little explanation on that, please.
But you know the class is recorded now, Abi. You can just watch
Oh,
the recording and you understand. You know the
okay,
class is recorded now.
okay, no problem, no problem. It's just I'll wait for the directional bias at the later time. Thank you.
Okay. Nemeka.
Good evening, Tony.
Yeah, good evening.
My question is from the last class, you told us to backtest, right? And when I backtested, I noticed that sometimes it's not really most times, market gives you a market structure shift with your inducement and then goes ahead to start breaking double structures. So in that scenario, what is ideal to do?
Focus on the first one. If it's when I was seeing you guys, I said that for reversals to occur, it needs to be a structure shift. Then for continuations, it needs to be a break of structure, a double break of structure. If
Okay.
if it's the first time that price is about to reverse to the upside, that it's been selling for so long and it wants to buy for the first time and it gives a structure shift, it does not come to your POI and it continues breaking more structures. Still focus on that point of interest. It will mitigate first. Do you understand? But if market already mitigated the structure shift zone and then it keeps giving you another structure shift, but it's now continuing the trend to the upside. So it's giving you a structure shift, but it's giving you like break of structures. Focus on the double break of structures because it's for continuations. The structure shifts will probably not mitigate. So if it's just, for
Okay.
example, now, like I'm
On Euro
coming,
USD, I saw some of that on Euro USD this week, and I was patiently waiting for the retracement,
don't worry, wait
and this
something.
happened.
Let me just show you something. For example, now, in this concept, there are many structures inside here, but I've seen a structure shift here. But
Yes.
since we are trading continuations and because it's already bullish, so we're looking for continuations and not reversals, we are going to focus on the double break of structures. But the first time that this market started buying, we're going to focus on reversals. So even these double break of structures and all those things, we're not focused on it because we're focused on the first buy after a long sell. So we're looking for reversals. But from this, we're looking for double break of structures. Even if you have structure shifts here, we're still going to focus on what? The double break of structure because we're trading
Okay.
continuations.
What if in a scenario where market respects your market structure shift and gives you a double break of structure and doesn't respect that but creates more double break of structures? What should we do then?
You focus on your right POI now. Do you want to skip the POI? You focus on the right one. You will not trade
Okay.
everything. Yeah.
Okay, sir. Thank you. Also.
I'll be going off soon, you guys. So
Tony, good evening.
yeah, good evening.
I beg, the only thing that's confusing me, you see that breaker block. Must it necessarily have maybe an engulfing candle? They said this. You said it's a failed order block. So
Yeah,
most of the
but
time when I go to the chart,
I also said it's a failed zone. I aside from saying it's a failed order block, I also
okay,
mentioned a failed zone. So the reason I added that zone there is if you don't have the other block shape with the engulfed thing, as long as it's a zone like a resistance level, a support level, you look for the body of that zone. It's still a breaker block.
yeah. And
Emeka,
again,
they
I'm
asked
having
me for my
issues
entry model. Yeah, go on.
with the double breakup structure.
How?
Sometimes to identify it used to be hard. If you're using it, it will be very easy. But if I go to the chart, it will look as
You,
if the candles are tricking me.
you have to keep studying on it till the candles stop tricking you now, because there's no how I can teach it again. It's just that's like how I've taught. Just have to keep practicing and understand until you get it. Emeka is asking what my entry model is. Emeka, what do you mean what's my entry model?
No problem.
The thing I'm teaching you here now, what am I teaching you? It's not my entry model. I
I will
don't
keep on
understand.
practicing because
No, well, let me worry. I want to still more people are asking questions, and I'm not even understanding again because I have to go very, very, very soon. Yeah, so if I listen to me, do very, very, very fast.
Hello, boss.
Yeah, I know.
Please, I want to ask is that, please, do you have any confirmation that you use at your POI, or we are not get already?
If I have confirmations, I would have taught it now. I don't trade confirmation. Once price gets to my PO, I enter.
Okay. Or can we use buy order or sell order?
That's not a type of technical analysis now. Buy order is when you're not active on the chart and you want price to trigger you immediately. You set a buy limit now. If you are there on the chart, you enter manually.
Thank you so
Yeah.
much.
John. John. Nnamdi.
Good evening, sir.
Good evening.
So my question is like this. Is it advisable to stay on the chart like for about an hour or two when you are looking at the chart and you're not seeing any setup? Is it advisable to remain there until you see something, or just take a break and come back maybe after a few hours? Like what would be advice for a newbie?
I don't anything you want to do, you don't. If you want to stay on the chat, you stay on the chat. If you want to take a break, if you know you can stay on the chat without feeling the impulse to rush and enter any setup, you can stay on the chat if you have that discipline. If you don't have the discipline, you can leave the chat, but you may leave the chat and come back, and the setup you're waiting for already formed and played. So you need to work on that discipline of being able to stick and stay on the chat without price giving you anything and still control yourself from taking any random trade you see. So it's all a part of discipline.
Okay, and I also wanted to know when will be the next class, the next two classes.
Now, calm down. I go drop on for inside group. Classes are Sundays, always Sundays.
Oh, only
I'm
Sundays.
all,
Okay, okay.
yeah, you guys, I'm done with today's classes. It's past an
Thank you,
hour,
sir.
and I have to get to things. Yeah. So
Thank you very much, sir.
no problem. I have to go off, please.
This guy.